I really find it interesting how financial advisors are so against life insurance. And I can tell you this, I've heard so many different ways that they've described it. They have a fiduciary responsibility to their clients, and they just feel that that's the wrong place to put people's money. And from their standpoint, I would agree with that statement because they are actually doing one thing with your money, and that's investing your money. They're not protecting your money, they're investing your money. And their goal is to make you the biggest return they possibly can. To me, it's kind of interesting that they're directly financially incentivized, or I should say disincentivized, of you putting your money into a life insurance contract because all financial advisors out there make their money and grow their business off of what's called AUM, assets under management. Every dollar that you put into a life insurance contract is a dollar that they're not going to manage and make a fee on for the rest of your life that they're managing your money. Typically that fee is around 1%. So to me, when I hear people argue that you have life insurance agents who are just trying to make a commission and it's their fiduciary responsibility to avoid that, I think they're not quite telling the whole story, because if you do the math over time of them managing your money and also potentially leaving your money at risk to taxation rates, they can't predict that, they can't control that. Leaving it at risk to market risk, they can't control that either. Educated gambling, now granted, they're gonna do a good job, the good ones, but it's still at risk. And even though this fee that they keep referring to is their fiduciary responsibility to avoid, you're also avoiding a lot of additional protections that are gonna come to the table when life does unfold and life does happen to you. So by having money into a life insurance contract, you can potentially protect and insulate yourself and your other investments, because you can pull money from that life insurance contract, tap into that death benefit. There are many other benefits that go along with putting your money into a life insurance contract. This should never be bought in for an investment purpose solely. Is the investment portion there? Absolutely, because the insurance companies have learned that you don't want to buy a product just for your beneficiaries to utilize. You don't want to spend your money with the insurance company and just have them take it. So there's been an investment portion component built into it. It's to your benefit. So I will happily sit down with any financial advisor at any point in time to have a discussion of why they feel that permanent life insurance is not bringing good value to the table and how I don't act as a fiduciary by recommending this product.